Hello there. In this video, we will be doing a question related to statement of financial position. This is one of the last videos in this series, Learning Fundamentals of Accounting 1 first. And let's dive into it. So this is the format of statement of financial position, and what we'll be doing in this video, I will be sharing the format of statement of financial position and also doing a question, a practical question. Okay, so we start with the name of the business on top, and then statement of financial position for the year ended, and then you state the date. Okay, so the statement of financial position format is guided by the accounting equation. The accounting equation is asset is equals to capital plus liability. Okay, so we started with the non-current assets. Non-current assets, these are assets which are not easily liquidated, while the current assets are the ones which are easily liquidated. Okay, so if you look at, we have the non-current assets plus the current assets, so that we get the total assets. Okay, this is the value of total assets. And then we go to capital. We have the value of capital, and we have the value of both non-current liabilities and current liabilities. So if you look at this value and this value, okay, this value and this one, they should be the same. Okay, why? Because assets is equals to capital plus liabilities, so this value should be the same with this. So that is what we call balancing. Okay, so if this value is not the same as this one, then we can say that your statement of financial position has not balanced. Okay, yeah, so statement of financial position is also called balance sheet, but under the balance sheet is normally drawn as a ledger account, T account, whereby on the debit side we have now the assets, and on the credit side we have the capital and the liabilities. But in this video we'll be learning this format, statement of financial position. So we start with the non-current asset. The non-current asset, it has a feature where we calculate the net book value of the non-current assets. Non-current assets is also called fixed assets. Okay, so we have its cost, and then we subtract the accumulated depreciation of that asset. So if we take cost and then we subtract the accumulated depreciation, we will get the net book value of that asset. Okay, so we do it for all the non-current assets until we get the net book value of each, and then we add them so that we get the total non-current assets. Okay, and then we move on to the current assets. We list them down. Okay, and one key thing to note is the prepaid expenses. So if you look at the cycle of how we create books of accounts, if you look at all the videos that are in this series, we have the journal. Then from journal we go to the ledgers. After going to the ledgers, we go to trial balance, and then after the trial balance we create the income statement. Now from the income statement is when now we can be able to create the statement of financial position. So if you haven't seen our video on income statement, please go through that video first before you see this, because we will be using the question which we did on income statement for us to do the statement of financial position. So if you saw the video on income statement, you saw that there were some expenses which were prepaid, and that amount of which was prepaid, that excess amount, is what is recognized as a current asset, the prepaid expense. Okay, so if you add them, you get this figure, which is the total current assets. So if you take total non-current asset plus current asset, you will get now the value of total assets, and then you close, and then you move on to financed by. The business is financed by capital and liabilities. So the value of capital, and then the net profit, this value you will get it in the income statement. So if you will get a net loss, then that negative value, this value will be in bracket if you will get a loss. But if it is a profit, it is a gain, so it is a positive value. You add on to the capital. Okay, so I made a mistake, so just remove this, just ignore this, you write it here. Okay, yeah, sorry for that. So the capital, you write it here in the end, net profit here. If it is a loss, you put that figure in bracket. And then drawings affects the capital negatively, so it will always be in bracket. So if you do this, you will get the total capital. And then you move on to liabilities. You have non-current liabilities, you add them all, you get the figure. And then in current liabilities, you add the current liabilities. And then, since if you look at the current asset, we have prepaid expense. In current liabilities, there is accrued expense, and this one I explained it in our video on income statement, so please refer to the video. So accrued expense is treated as a current liability. Okay, so those values, you add them, you get the total current liabilities. So if you add capital plus the two liabilities, you will get this figure, and then you close. So asset is equals to capital plus liabilities. Okay, so this is the format. Okay, so just pause the video and just copy the format, and please ignore this. Okay, so we will just continue with what we did in our previous video on income statement. Okay, we will use this question which we did in the last video of income statement. Okay, so we will just dive in to writing the statement of financial position. Okay, so the name of the business is Enterprise A. And then statement of financial position for the year ended 31st October 2024. Yeah. So you use a ruler to underline, and the name of the business and the title, if you are told to write it in capitals, please do, because this video is just for illustration purposes. Okay, yeah, so now let us dive into the values. So we write the currency. Currency is in shillings. Okay. Now we will write the cost, accumulated depreciation, and then net book value. Okay, I hope you are seeing. So we start with now here let me write non-current assets. So in this question we have the non-current assets as property and equipment. Okay, property, equipment. So at cost they are 90,000 and 57,500. $90,000 and 57,500. So the accumulated depreciation, we are told provision for depreciation as at 1st November are these values, and also we calculated for depreciation. We got 908,625. So the accumulated depreciation for property will be the 900 which we got plus 12,500. Okay, so this one will give us 13,400. Okay, so for property the accumulated depreciation is 13,400. What about that of equipment? Provision for depreciation for equipment is 32,500, and in our calculation for that period we got 8,625. So accumulated depreciation for equipment will be the 32,500 which is as at 1st November 2023, and then we add 8,625, and this one you will get 41,125. So this we write it 41,125. 41,125. Okay, yeah. So now these values we are subtracting, so we put them in negative, in brackets rather. So for us to get the net book value, 90,000 subtract 13,400, you will get 76,600. 57,500 subtract 41,125, and get 16,375. So if we add you will get 92,975, and this is our total non-current assets. So we move on to current assets, and in our current assets we have our closing stock. Okay, closing stock is treated as an asset. So stock 25,900. Okay, we also have cash in hand 151. We also have debtors, and the value of debtors, we won't use this one because under the additional information we adjusted the value of debtors. So debtors 45,969. They are trade debtors 45,969. And then do we have prepaid expenses? Yes, we do. We have the prepaid expenses in Roman 4, whereby the other operating expenses, they were prepaid by 500. So prepaid other operating expenses 500. So we add these values, 25,900 plus 151 plus 45,969 plus 500. You will get 72,520. And now we add this value to this value. $92,975. We will get 165,495. Now this is our total assets. Okay, and we close it at there. Okay, so we go to now the capital and liabilities financed by capital. So we have capital, then we have the net profit, and then we have the drawings. So for capital, we'll get it here, 98,101. 98,101. Okay, then our net profit, we got it from our income statement, 36,924. 36,924. Okay, and then our drawings, we will use this amount, this one, the adjusted, not this one. Okay. Okay, we use the adjusted one. 29,970. 29,970. So that is our capital. So 98,101 plus 36,924 plus 29,970. We will get 164,995. So this is our total capital. Capital is also called equity. So we move on to liabilities. Liabilities, we have two non-current liabilities, and the only non-current liability we have is the loan, 13% loan. So 13% loan. 13% loan is 12,000. So that is the only one which we have. What have I done? For the drawings, it is a negative value. Drawings is a negative value, so we needed to subtract, not to add all of them. Okay, that is a mistake I have done. So when we add these two, then we subtract with 29,970. 29,970. Oops. We get 105. 105. 055. I'm sorry about that. 105,055. Okay, so here we have 12,000 as our 13% loan. Then current liabilities. So under our current liabilities, we have creditors, and creditors are 33,600. 33,600. And then we have bank overdraft, 14,500. 14,500. That is bank overdraft. And then also we saw that there were two expenses which were accrued: wages and salaries, and another aspect of other operating expenses. Okay, so we have accrued wages and salaries, and we have accrued other operating expenses. That of wages was 140, and the other one was 200. 140, 200. So if I add those two values, we'll get 48, 440. So I have our total capital, which is 105,055. We have our non-current liability 12,000, and we have our current liabilities 48,440. So if we add them, we will get 165,495, and then I close. So looking at it, my total assets is 165,495, and my capital plus liability is 165,495. So I can clearly say that my statement of financial position has balanced. Okay, so I wouldn't want this video to be as long as that of the income statement. So this is just to show you that when you have done the income statement well, the statement of financial position will also flow smoothly. Okay, so that has been it for the statement of financial position. So please, I will insist, kindly look at our video on income statement, because these values are subjected to balance if we've done the income statement part very well, because whatever we've just done is to just pick values from the question we did on income statement. Okay, so please look at that video. That has been it for statement of financial position. If you have any questions, please feel free to comment on this video and I will reply. Then if you have found this video and this series useful, please share it with your peers, like and subscribe for more content like this. See you in the next video.